Alright guys, so this is your crypto update for today. So let's go ahead and take a look at the moving average here. It looks like we had a dead cross right here on Thursday. So a dead cross is it means simply means the lower moving average crossing below a higher moving average, in which case the 50-day moving average. The 20-day is the red one, the orange one is the 50-day. It crossed below it, and we are trading below the 200 moving average right now. So if this chops sideways in the next few days, which that usually resolves itself by going lower, in which case the next one that the 20-day moving average will cross below will be the 100-day moving average, and then eventually the 200-day moving average. And when that happens, just kind of like scrolling back here, looking back in the past where we've had similar occurrence, is back here, back in the beginning of the year. So we had a 20-day moving average crossing below the 50-day moving average, and then it crossed below the 100-day moving average, and look at what happened to the price. And eventually it kind of sorted itself out on this trend line right here. So when that happens, we could potentially pierce this trend line, maybe go even lower, maybe to these lines here. So 95,521 would be key level for Bitcoin, followed by 88,777. Those areas would be good buying opportunities. So if you guys are looking to get in Bitcoin, it might not be too late. Just wait for this. Wait for the dead cross to fully play out. So if we take a look at Ethereum here, same similar type of thing going on. So it crossed the 50-day moving average, and then now it looks like if it keeps going lower, then it looks like it could at least retest this trend line here around 3600, followed by this potential big head and shoulders neckline here at 3460. So if this head and shoulder triggers, you could be looking at a drop to around 2300. But first it's gonna have to test 2863. That would be key level, followed by around 23 or 2400. And then also, if we take a look at what's going on in the Magnificent Sevens, um, Tesla is still above the 20-day moving average, but I think the one that's looking kind of weak right now would be Microsoft. Wait, no, not Microsoft. Meta. Meta already had a dead cross, similar to Bitcoin, and this is kind of trading below or around, yeah, like around the 100-day moving average. So if this continues next week, we could see this fall to as low as 676 next week. And if that cross continues, this could take us to as low as 622, followed by these areas right here. This is also a huge gap fill. Google is trading pretty strong right now. It is above 20-day moving average, but it is at the top. So it is at the all-time highs here. So I wouldn't be surprised if this starts to curl over, as it has maybe a few more days to trade up here, maybe until early November, before potentially breaking lower. So these are your levels, pretty much your line in the sand for Google, all the way up here. So between 257 all the way up to maybe 269, 270. And the downside risk for Google is actually much greater than the upside right now. Amazon, oh yeah, this is also showing signs of weakness right here. As you guys could see, that cross happened here around October 1st, beginning of the month, and then the breakdown occurred here around late September. That we did actually retest the breakdown point and got rejected. That was like a 5% move right there. 5% move to the downside, and now it's looking like the 50-day, no, the 20-day moving average is now about to cross the 100-day moving average, and Amazon is trading below the 200-day moving average, which is pretty darn weak. So that's something you don't want to see. Kind of like what happened here. 20-day, I mean, yeah, 20-day cross below 50. We had a huge sell-off, and then cross below the 100-day. Selling continued. We did have a relief rally when it hit this trend line here. It tried to get back above, but then it ended up crossing below the 200-day moving average, which caused it to go down even further. That was the Liberation Day sell-off, I believe, and then the April bottom here, and then we've just been on uptrend ever since. And then we had a golden cross. That is the opposite of 20-day moving below the 50-day. This is when the 20-day moving average crosses above the 50-day, and then price was able to get back above, even gapped up here, and then retested the 20-day moving average, and then also 200-day here. So the 20-day cross above the 50-day, and then cross above the 200, and then the 100-day moving average, and price was using pretty much a 20-day moving average as support, or any of the moving average as support at that point on. But now it's kind of shifted a little bit because of the dead cross it's had recently. So we'll be paying a close attention to that. So pretty much when the dead cross happens, the moving averages becomes resistance until it finds support at these potential levels here. Okay, now let's take a look at Apple. Apple is kind of like bear flagging above the 50-day moving average. It did kind of pierce above 20-day, so we'll have to monitor that next week. If you take a look at the Dow Jones futures, it is trading below. It closed below the 20-day moving average. This one as well closed below the 20-day moving average. This is the Russell 2000 futures. Nasdaq futures, it closed above the 20-day moving average, but it still hasn't taken out this huge candle from last Friday. So that is a bit of a concern, and it's also at all-time highs. Then we have the ES right here. It's trading slightly above the 20-day moving average, but still hasn't taken out the big, huge bearish reversal engulfing candle that we've had last Friday. So that is a bit concerning right there. The dollar though did have a golden cross. It is trading above the 20-day moving average, and current resistance would be around the 200 moving average. I mean the 100-day moving average, followed by the 200-day moving average. And if we take a look at the US 10-year yield, see here, it is trading below the 20-day moving average and all the other moving averages. It did have a dead cross over here, then it had a golden cross, and then another dead cross here, another one. So at some point this is going to find support. I assume that it's probably going to go to as low as 388, 9%. Otherwise this could gap up and then it could just float back up again. We'll see. Next week will definitely be an interesting week, so I hope you guys oh wait, one more thing. So the VIX had a huge spike up. Usually when it crosses this line here, it goes it usually shoots up, but that was a shot up, I guess, and then now market's like going back into complacency mode again. So if this was to go down to 18.44 and even lower, I would heavily buy the VIX, as that means people are like not worried that anything can go wrong. But looking at the golden cross here, we did have a golden cross. That's how we got this huge spike. Normally when that happens, it usually doesn't just come back in right away. Just like with the golden, when we have a dead cross, when it crosses, usually kind of takes some time to settle, and then before a golden cross appears. So this whole process here probably, I think, took about since April. So April we had that cross, VIX went down, meaning greed is fueling the market, and then now fear is starting to creep back up. When VIX is up, meaning markets being fearful, It's not always the indicator to buy. You should always be looking at the charts as well, aside from the VIX. Just kind of like what we've been doing. Do your technical analysis, find your support, find your resistance, and then go from there. Taking a look at gold. Gold is topping out here. It may at least retest 4,000 in the coming days or weeks. Silver, same type of deal. It is above the 20-day moving average. That's been using that as support since April 15. Um, and it might actually retest that. Just look at how overextended this is. Um, and then yeah, that's pretty much it, guys. Thank you again for watching. I will see you guys next week. Don't forget to like, follow, comment, and share.